Good morning. Welcome to Chaikin PowerFeed, your daily market digest for Tuesday, August 7th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics, and you can follow me on Twitter at Dan_Russo_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. So U.S. equities finished higher in Monday's trading, though upside was limited, and indexes traded in a really narrow range for most of the day. Consumer discretionary, technology led, while REITs and telecom were the only sectors to trade lower. I would also say that financials led, and that's kind of encouraging, right? Those are the three groups: discretionary, tech, and financial, kind of the three biggest weights in the index, three groups that we're always looking for to be leadership for the bull market. Treasuries were mixed with a bit of curve flattening. The dollar was stronger against the major currencies. Gold down 40 basis points. WTI crude finished up nearly 1%. It was up about 80 basis points, but off the highs of the day. It is trading up again this morning. Breadth on the New York Stock Exchange was positive 1.5 to 1. Breadth on the NASDAQ was positive 1.7 to 1. And as we get to the desk this morning, S&P futures are up 20 basis points. Asian markets were higher overnight. China snapped a 4-day losing streak by rallying. The Shanghai market rallied over 2.7% overnight. European equities are higher as well. Treasuries are weaker with some curve flattening. The dollar is lagging. Gold up 50 basis points, and WTI crude, as I said, is higher, adding 90 basis points this morning. So, large cap index, the S&P 500 trading into that resistance zone that we've been highlighting. We've been highlighting 2840 to 2850 as a resistance zone, and we are testing resistance at 2850 this morning. Traded there yesterday, kind of closed near the highs, but and we're trading higher this morning, so we'll see how the market reacts at 2850. We do have support just underneath at 2800, 2771, 2741, and 2703 is the rising 200-day moving average. As we said, resistance comes into play right here, 2840 to 2850, and then the all-time highs at 2873. And it just kind of feels to me like the market wants to test those highs, right? Everything we're looking at is kind of pointing to this grind higher here. We want to test the highs, which is kind of interesting considering this is the part of the year that's seasonally weak for the market. So we'll just, we have to trade what's in front of us and play the hand that the market deals us. And right now, the market seems intent on pushing to that 2873 all-time high level. RSI has not become overbought still. You know how I feel about that. We're watching it. Chaikin money flow indicator, however, is bullish. So nothing really changes here from a secular view. Consolidating within the context of a secular uptrend likely to resolve to the upside remains the case for us here. Market in a minute. PowerFeed subscribers every day. I'll kind of give you the bullets, what I'm looking at, and these bullets actually come from my morning note that goes out to Chaikin Analytics clients every morning. Obviously gets a lot more in depth, but these are kind of the high-level thoughts that point to what I'm talking about today. S&P 500 trading into that resistance level. We hit that tech and discretionary led. That's encouraging to us. We're going to take a look at the tech sector a little bit later. Oil is building support at $67. I think that that's important for a potential emerging bottoming process for energy stocks on a relative basis, and healthcare is emerging as a relative leader. Futures do point to a higher open today. Today is Tuesday, so I do my sector relative note. So that's we're going to be heavy on that today. Major indices from a power bar perspective are predominantly all skewed to the bullish side, right? Dow at 6 to 3, S&P 500 seeing an improvement, 114 to 64. NASDAQ's better than 4 to 1 in favor of the bulls, and small caps continuing to improve. And you can see the outperformance here yesterday. Small caps outperformed the S&P 500 by about 19 basis points. Communication services up 1%. So according to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish. Major indexes are mixed, and really it's a function of that choppy trading in the S&P, but as I said, kind of feels like we want to push to the highs. Our stock of the day for PowerFeed subscribers, we'll give you a stock every day. The stock is generated based on our proprietary power gauge rating. Today's stock is US Cellular, ticker symbol USM, has a very bullish Chaikin power gauge rating, closed at $40.51, up 8.34% yesterday. I can tell you're probably looking at the chart on the right already. This one does look wild, but when we roll up the four factors for the Chaikin power gauge, we get a very bullish rating due to very strong price volume activity. That's the technicals bucket. Very positive expert activity and attractive financial metrics, but the stock does have weak earnings performance. So what we have is a very bullish stock with a strong trend in a strong industry, but I don't think it's ready yet. And we'll walk through the process and we'll see why. We can see the power gauge where it's been over the past 12 months. There's that very bullish rating, but the market and the model are not in agreement. Stock's been underperforming relative to the SPY and has been doing so since about the May timeframe. On top of that, the stock is overbought based on our overbought, oversold indicator, and money flow is bearish. Now, money flow has been very volatile over the course of the past 12 months, and you can see that in the trading. I mean, realistically, this stock has been in a tight range. We're closer to the top end of it, right? We're extended from the long-term trend line after this earnings gap higher. For me, tactically, this doesn't set up. Interesting name, going to put it on a watch list. But, I mean, you have a pretty well-defined trading range here. Call it $40 to $41 on the upside. Call it $32 to $33 on the downside. Doesn't seem compelling to me to chase this stock at $40.51 here, especially when it's overbought, especially when it's been underperforming the market. We'll add this one to a watch list, but we're not playing here today. Sector tracker over the last 5 days, tech has moved to the top of the list, and that is encouraging. So has communications. Real estate remains there. Remember, we've been open to a bottoming process in real estate on a relative basis. It's taking some time, but it is playing out. Healthcare is just emerging leadership. We're going to look at that today. Energy. Oil kind of pulled back below $70, and that's weighing on the energy sector. I do think energy is trying to form a base, but you have to be selective within the group. Our industry in focus today is equipment and services, and that's the group that I have not liked. I focused my energy bullishness on the E&P names. So if you look at the ETFs, it's XOP rather than the OIH. Oil and gas equipment and services has a very bearish Chaikin power bar ratio, 14 bearish or very bearish stocks for only 3 bullish or very bullish stocks. Over the past 6 months, the group's been leadership. It's outperformed the S&P by 5%, but this power bar ratio looks at future potential, and it's very weak. Group is currently ranked number 21 of 21 subsectors that we look at, and it's moved down 2 slots over the past week. So some of the indicative names there, names we want to avoid on the long side or potentially look at for bearish exposure: CLB, Core Labs, Schlumberger, SLB, and RPC, RES. Let's take a look at one of those here today. Core Labs, CLB, very bearish. Chaikin power gauge rating. Weak trend in a weak industry. Power bar at the bottom of the screen tells us the story. It's been mostly bearish or neutral for the past 12 months, and back in July, stock began to underperform relative to the SPY, and it is doing so more intensely now. Overbought, oversold is middle of the range, so we're not there yet in terms of a tactical entry point. However, money flow has been bearish since July. Stock is below the long-term trend line, which is now turning lower. I think you want to utilize strength to the 115, 117 level in this stock to sell it if you own it, or maybe buy put options if you're looking for exposure to the downside. If you're uninvolved, I think you want to stay uninvolved. This is not the type of name that we advocate for owning in your portfolio here. Very bearish stock, weak trend, weak industry, underperforming the market. We're just waiting for an overbought condition to take a bearish stance. S&P 500 movers yesterday. A lot of this is obviously still going to be earnings related or follow through. JEC up over 7.5%. Dish following through up over 5.5%. AMD stocks had a great move. I think it's probably extended here. It does have a neutral rating. Facebook getting a little bit of a bounce yesterday, up nearly 4.5%. PCG, a very bullish stock, up over 3.5%. So where we want to focus our attention, JEC, Dish, and PCG are the bullish or very bullish stocks that had some nice moves. We want to do some work there. On the downside, Newell down over 14%. PX, that's Prax Air, down nearly 4%. That's a very bearish stock, so we want to focus there. We also want to focus on TPR, which was down nearly 2.5%. Kraft Heinz, stocks had a great move, right? Consumer staples have had a nice counter trend move on an absolute and relative basis. Kraft Heinz kind of doing well there. We're watching it. I'm not ready to call a relative turn yet for consumer staples. I go through that in my note today. However, with the sector kind of doing better, we want to look at some of the better names, and Kraft Heinz is one of them. KHC, put it on a watch list. Earnings update, yesterday's surprises, Marriott's beats by 37 cents. CA missed by 16 cents, but they're being bought by Avago, so I don't think people are paying too much attention to their earnings there. Andvir, ANDV, this is a bullish stock. They beat by 58 cents. We want to watch this one here today. It's been a Mark Chaikin favorite. If you've been reading his market insights every Sunday night as a Chaikin Analytics subscriber, you've seen that name mentioned. ANDV is the one where I would focus today. Tyson, TSN, getting a bounce. Some of the food stocks within consumer staples are also starting to do better. But let's look at who's reporting today. And importantly, I think the highlight is actually going to be a neutrally rated stock. It's Disney after the close. Also look for bearishly rated Albemarle, ALB, after the close as well. That's been a perennial loser. Stock is mired in a downtrend. Chaikin suggests caution when holding these bearish stocks ahead of earnings. Dentsply trading lower. X-Ray reported this morning. Not much action in some of these other names, but realistically, like I said, all eyes on Disney tonight. So as I said, we're going to focus on sectors today. It's Tuesday. I call it visiting our sector relatives. We do it every Tuesday. Kind of look at who's leading, who's lagging under the hood of the S&P 500. And here's Tech XLK, the SPDR ETF. And this is an uptrend, folks, up and to the right. It is an uptrend. We had Facebook and Twitter blow up a couple of weeks ago. It did a little bit of damage, but, short-term in nature and did not ding the trend at all. Still above the rising 200-day moving average. The RSI of the XLK has not become oversold at any point in the past year. That speaks to the strength of this bullish trend. And now here we are. Look at the XLK relative to the SPY. And it's been leadership. It's in a steady uptrend. We've had these pullbacks to the trend line, such as what we had last week and the tail end of the week before that with Facebook and Twitter. But now we're bouncing off that trend line and beginning to move higher again. I think technology remains leadership. I think you want to utilize this opportunity to look for bullish and very bullish names that have become oversold. One that comes to mind is Salesforce.com, ticker symbol CRM. Take a look at that name. Oil is building support at $67. I've been bullish on the commodity. I like equity exposure, as I said, via the EMP names. And you can see here this $67 level has kind of been, a polarity line. It's a line in the sand, right? We hit it in February and faded, hit it again in April and faded, finally broke through and hovered around it here in this June-July timeframe, and now it's support. I think it's building support at $67, hovering around the 50-day moving average as well, rising 200-day moving average. But look at the RSI of crude. Has not been able to become oversold on any of the declines this year. That, to me, speaks to the strength of the bullish trend. And look at just the mounds of green when it comes to Chaikin money flow. Money is flowing into oil. It's kind of, tapered off of late, but for the most part, over the past 12 months, Chaikin money flow has been extremely bullish. And finally, in an encouraging sign, as oil has kind of pulled back here from $74 to build this base at 67, it's been doing so on declining volume. So, to me, the sellers are not in control here. I think the buyers still have the ball. The trend is still up in oil. I think you want to use weakness down to the $67 level to look for opportunities to buy equities in the EMP space. Look at, screen the XOP for bullish and very bullish stocks. And here's healthcare emerging as leadership. We have XLV relative to the SPY. So healthcare relative to the S&P 500. We've broken this downtrend line, gone to the upside, taken out the 200-day moving average. Next step is for this to turn higher. The RSI of the ratio has shifted to bullish ranges and actually became overbought with this recent move higher. And Chaikin money flow has been bullish. I think healthcare is emerging as leadership. And what's encouraging is you're starting to see some of the big drug companies like Pfizer and Eli Lilly come along for the ride. I think that healthcare has legs as market leadership. So you can get powerful, profitable stock ideas and more by signing up for Chaikin PowerFeed. It's for free. Go to www.chaikinanalytics.com/PowerFeed TV to sign up. Special thanks to StockCharts.com and StockCharts TV for hosting this show every day in the 9:15 slot. Have a great Tuesday, everyone. Happy trading.